Hello everyone, here for another topic of the learn and trade with Popeye. Today I would like to show you how I use the RSI, the relative strength indicator, to add confluence to my trading setups. We will see what is the RSI, how to set it properly on TradingView, where and how to apply the indication given by the relative strength indicators, and then some tips that I'm using to use it in a better way. But before moving to the chart, make sure you subscribe to the channel, leave a comment and a like. But without further ado, let's check some chart and some logic behind the RSI. So the RSI is a standard indicator you can find in TradingView, but in most of the trading platform, and is shown as an oscillator. Basically, it shows the speed and the magnitude of price changes. So it's mainly used for momentum signal to let you know if certain price movement are lacking momentum. So whatever is a bullish or a bearish move, if they lack momentum or if they can show you if there is exhaustion both on buyer and seller side. I'm mainly using the standard setting of the indicator that are the 70 and the 30 level for the overbought and the oversold, and the period, the length of the indicator on 14 period. Then we will see what this means practically on the use. So again, on the standard setting, you will see that there is a part with a darker color. This is, let's say, the normal range of the RSI, where the limit of the overbought is at 70 level and the limit of the oversold is at 30 level. Then in the middle there is the 50 level, and I will show you how to use it. The period formula is the one that you technically have to use once you set it. I have set it on the standard on the 14 period for the divergence, but then we will see also a little bit how in a different way we can use it. So the first topic, let's say, is the overbought and the oversold levels on RSI, and I don't specifically use it just per se, simply because overbought and oversold are very lagging indicator, because price can stay for a long time in a bull run in an overbought territory, like we had here in Bitcoin. To give you a simple example, price started to be overbought down here, and it was in overbought territory all this move up here, and he went back again in overbought here, he went again back in overbought up here and up here. Again we were overbought here, so I don't simply use overbought and oversold, because it's normal that in an uptrend price stays for a long time in overbought territory, and is normal in a downtrend that it stays long time in an oversold territory. But oversold and overbought are interesting level because we want to use them to use especially divergence on extreme level. So the main use I have on RSI is mainly for divergences, and I only use the standard divergence setting. The divergences, very simply put, are situation in the price action where you do have, for example, the price going down, printing a series of lower lows, and RSI controversially starting to do divergence, so means stopping to do a series of lower lows and starting to form potentially higher lows. So whenever you see in the RSI something like this is called a divergence. It's very important. This would be a bullish divergence, so price is moving down, but RSI is moving up. So this is a bullish divergence that potentially will signal you a potential reversal. So this bearish trend that is moving down, the bearish trend that we had here, potentially thanks to this bullish divergence on RSI, will potentially change and move to a bullish sector, a bullish trend. The same applies for the bearish divergence, where you would have a bullish move to the upside with higher highs, while on RSI you will have the failure to make. Now I'm making the drawing quickly. So here you have higher highs, and here you start to have lower highs. So this in this case is a bearish divergence, because this bullish move probably is gonna stall and reverse, so we will probably have a bearish move following this divergence. I do see people making many mistakes. Remember that for bearish divergence you take the highs both in price and on RSI, and don't do the mistake of taking the highs here and, for example, the low here. The same for the bullish divergence that would look something like this. In the bullish divergence you take the low on the price and the low on RSI. So simply put, whenever you are looking for the divergence, remember that you have to look at the same side. So highs versus highs, lows versus lows. Never do the opposite. If you took the lows here and the highs here, you're not really checking a divergence. You invented something that unfortunately has no sense. So very simply put, divergence is whenever price and RSI, they are doing something different in terms of price action, if we want to look it in a very simple way. So this is what we want to look for, but the important part is where we want to look for this divergence. So first of all, we want to look for this divergence at key levels in price. So you always start from the price action. You never start that you open RSI and you start casually to look for divergence anywhere in the chart. Then you want to look for RSI, you want to look for levels of interest. So bullish divergences, you want to look them in place where there is demand or support in price, and bearish divergence, you want to look for bearish divergences or at resistance or supply. Simply because if you use divergence properly in the price action, in the chart at support and resistance level or supply and demand level, this will give you a further edge on the use of the indicators itself and the divergence itself. So to just to use some example, let's see on the daily chart. If you see this level, for example, not clear, probably here. If here we can say there was some sort of OB, we can see that at every bounces that we had here, there was a divergence. So price was moving lower, RSI was moving higher, and we get the bounce and a local reversal. Probably we can see some further divergences. This is also a clear divergence when price moved down, and we have this RSI not making lower lows like the price, but starting to make higher lows. controversially, you can look in other time frame. When we reach resistance level, probably we did have some divergences. Let me see if I can find some in the chart. This is potentially, I can't see them clearly here. Okay, then we will find some others in the chart later on. So what you want to see? You want to see price reaching a support and resistance level, and the RSI to signal you a reversal should also be in the extreme of the oscillator diagram. So like this one that we mention here, just to show it clearly. Price was moving down, RSI was moving up, and this divergence occurred in a clear oversold territory, so at the extreme. You are using this divergence for a counter trend trade, so you usually trend reverse in extreme territory. Extreme territory is around 30 to lower for the oversold, so for a bullish divergence, and extreme territory is around 70 or above for a bearish divergence, so a reversal of an uptrend to the downside. So make sure that in price you look for demand or support and resistance and supply, and make sure that you look for divergences that are happening at extreme level or very close to extreme level. Should this divergence be happening up here around the 50 level, is not something very interesting, or at least the signal is less powerful. This it goes along with the divergence. Another part, let's say, from the textbook application of the divergence are the period. As we said, if we see here, the length of this RSI is 14, so it means that usually divergence should be looked on a period of 14 candles on that time frame. So if you see here, probably we exceeded these 14 candles, we have 17, so I don't tend to be extremely precise on this, so even if there is some few candle more, it's still fine. What would be wrong is to look for a divergence very far away in terms of candle from the place you are looking. So to look this divergence, for example here in the 4-hour time frame, to make a divergence from this low to this low that are lower low, and say that there is a divergence here, is technically wrong. Technically wrong because the period has exhausted, and the RSI is not working that way, so it's sensitive to the period. So again, I'm not so fixated with the 14 period, but do not use a period that is very long. In this case is probably 60 bars, so it's very far away. Simply move to a higher time frame. In this case could be the daily, because in a higher time frame, if the divergence is still there, and that is the case of this price action, you will still respect the relevance of the period of the RSI, that in this case is 11 bars. Again, if somebody would keep doing this game here, they are again technically doing something wrong. You see this happening many times on CT, and this again from a technical standpoint a wrong use of RSI and divergences. In this case again you can move to higher time frame, you still have somehow the divergence. The problem is that this divergence is not in extreme territory, so it's still valid, but it's probably less relevant, and in this case is the 3-day chart. You probably are respecting more or less the the time period of relevance of the RSI. So in the 3 days a valid 14 bars divergence on RSI, and the only problem in the 3 days is that we are not in such a oversold territory like we could be potentially on the 4 hour. The second, let's say, tips is that divergences are a momentum signal, so you are never sure when they move. My favorite divergences are in the 3 drive pattern, so exactly the example we were seeing here on Bitcoin, because if there is 3 pattern going down like these 3 lows going down along with a clear divergence as we have here, you potentially can argue that there is a stronger seller exhaustion, and these lows have been taken out, this lows has been taken out, we took out also the third one, and potentially now we can move for a further move up. So whenever you see divergence with 2 tap are valid, not saying that are not valid, but if you see divergence with a third tap, you have a further confluence that probably is time to move to the other direction. So these to give you a few of the tips, then we will see how to develop some trade setup. Furthermore, remember that you are always, when you use this divergence, counter trading the trend. So potentially, as we discussed in the other video, like the trend reversal video, I will link it at the end of this video, or the standard range deviation, since you are counter trading, is always wise to wait for some bullish structure. Similarly to what happened here, you did have 3 divergences moving down, you could have simply entered here, but you could also have waited for a bullish market structure here and enter on the retest. But again, I don't use divergence for pure trade setup, but what confluence on level of interest and possible to move to the other level. Last but not least is the use of the 50 level. The 50 level is, I basically use it mainly on high time frame, daily, 3-day or weekly, and is usually a good indicator of, let's say, bullish dominance of the market, or bears dominance of the market. I don't use the 50 level really trading wise for setup, but mainly to give me an indication of what is going on. If you see simply on the daily chart, as soon as Bitcoin broke this range where we have been trading very long time, last year for almost 9 months, as soon as we broke here on the daily, Bitcoin started to be above the 50 level. So we did have some test here, was pretty not relevant, but as soon as we broke the 50 level, then we have been uptrending for pretty long time. Here again started to be chopped and lost, and since we broke the previous range, so this range where we have been traded for 3 months, exactly here the 50 level was lost and never reclaimed. So this really gives you a bit of a feeling, and as you can see in all this tap and price moving above, RSI always failed to reclaim the 50 level. This become even a stronger level if you use in the weekly. You can clearly see how the 50 level is usually an indicator of, let's say, really bullish or bearish trends in the market. If you see clearly all along this line, whenever the 50 level, that is more or less here, you can clearly see that on the weekly here we stayed always almost above the 50 level, that until here, and once the 50 level was lost more or less at this level here, then was never reclaimed, until more or less the break here and the structure, and then the move up all the way up. Here 50 level on the wicks, it was more or less all held. It was lost a little bit here in this low. The moment it was reclaimed here and retested around here is when we have the new bullish resumption. And now, unfortunately, as you can see, since we lost this range here down here, the 50 level here was lost again. Another way that I use RSI for let's say seeing some momentum is I'm not really a breakout trader, or I'm not really using trend line, but sometimes RSI can give you some further confluence to see if there is real momentum in some move. A very simple example, I think, was this price action here, where RSI had a breakout, but the price never break out. In this case, you see this downtrend, probably is better seen on the daily. Yes, you can see that all this push we had here, we never had a proper breakout on RSI. So potentially, whenever you will see this trend line broken, especially for the people that likes to use diagonal, you want to see also RSI breaking. In this case, you have also further confluence of the 50 level. So this is not really something you exactly use for a trade setup, but it gives you a sense of the market. So you want to see price breaking and the RSI breaking as well. After the breakout, you want to see the 50 level holding. In this case, you can see that the downtrend is downtrending both in price and RSIs. The only difference is that while price keep doing these lows, here potentially in some time frame, as we've seen in the 3 days, there is a divergence. So where you can add this RSI confluence, both in ranges and in trend reversal. So again, as I say, I will link at the end of the video both the video on trend reversal and range setup, where you can see practical use of the RSI in this context. Trading wise, let's say it's pretty simple, the use, as I was saying, and you have to always use RSI in the proper context. So for example, here there was a clear resistance level, and the moment where price started to move up, here was moving up, somehow RSI failed to move up along with price, and then we had the rejection. This is the 12-hour, but you can see a similar setup also in other level. So to summarize, just for the sake of keeping the video short, then I will make a second version of RSI with a little bit more tricks and the pro version. The RSI is just an indicator that shows speed and magnitude of the price changes, and it will give you momentum signal whenever the uptrend or downtrend are stalling and potentially starting to reverse. The key level to monitor is 30 and 70, because you want to see price reversal in a bearish divergence above the 70 level, and for a bullish divergence below the 30 level. Always remember that RSI divergence are working with a period formula that is standard on the 14 period, so do not be too much strict, but do not even apply divergence on very long period of bars, candles. Just switch to an higher level, higher time frame. Always use divergence on first checking the price action, and checking resistance or support level, or demand and supply level. The two tips is the use of the 50 level on night time frame. Below 50 level usually we are in bearish territory, above 50 level we are in a bullish territory. And finally, whenever you want to see some diagonal breakout, add as a confluence the diagonal of the same period on RSI, and hopefully you want to see a breakout on that on the RSI too. So just keeping it short, mainly for beginners or people that have never used RSI. I will try to make an advanced version in the coming weeks, but before leaving, make sure you subscribe to the channel, leave a comment and a like. Take care and stay safe out there.